everyone. In this section of the course, what we're going to cover is what makes commercial real estate such a great investment. It's not the sexiest business in the world. It's not like crypto or biotech where things can jump in valuation suddenly to thousands of % higher, but it is a steady business that you can scale, and it has a lot of great factors working for it, and we're going to cover those in the next few slides. So first of all, why commercial real estate? First of all, there's dozens and dozens of asset classes that you can choose from. Everything from self-storage, mobile home parks, to retail shops, land plays. There's literally hundreds of different ways to make money in real estate. So there's almost a different niche for everybody. Whatever it is that you're interested in, wherever you are, you want to find one particular asset class. And in this case, you're interested in storage, and we'll cover why storage is the best in our opinion. But in this case, we're looking at storage, what makes it stand out, and then what you want to do is develop your edge in that asset class by knowing everything about it. So commercial real estate has fantastic tax benefits. With self-storage, you can cost segregate the property and basically get a tax loss up front that covers your income from the property as well. Of course, we want you to speak to your CPA before you do any of these tax strategies. This is just as a general idea that you can write off a lot of income taxes, capital gains taxes, passive income taxes, simply because of the tax laws favoring commercial real estate. There's the opportunity for capital gains. If you buy a property at $2 million and you improve operations, you boost revenue with better marketing, you cut costs, you increase the NOI, you can increase the value of that property by several million in some cases, giving you a fantastic opportunity to grow your capital and get a solid return on investment. Commercial real estate produces cash flow. So if you invest in some stocks, you've put your $10,000 into a stock and you get nothing in return. It might bounce up, it might bounce down, and all the while you're waiting, you get nothing back. You may win at the end or you may not. With commercial real estate, as the value of the property is appreciating, as you're paying down the mortgage, you're also getting cash flow. You're getting paid to hold. So you're getting a return on investment. And those cash flows can be substantial too. Real estate acts as an inflation hedge. There's only so much land. If more money is printed, the value of that land will go up over time. If there's $1,000 in circulation and 2 pieces of land, they're worth $500 each. Double the money, there's still only 2 pieces of land. So real estate tends to increase in price with inflation, which is also fantastic. Imagine you buy real estate 30 years ago. Look at the house prices, $10, $20, $30,000. They've increased over time. What if you had a $10,000 mortgage from 30 years ago? Now it's nothing, right? Because the inflation has basically eaten away the value of the money. The real estate has gone up, but the debt has stayed the same. So that's a fantastic benefit that many people don't realize, is that the longer you hold real estate, the more inflation works in your favor to pay off your debt. You can borrow to buy real estate. With stock, if you have 100 grand, you can buy 100 grand's worth. Yes, you can take, margins, etc., but those are relatively risky. Whereas with real estate, you could buy a $5 or $10 million property with sometimes a very small percentage down if you're creative with your finance. Of course, in the current economic times, you want to have a good down payment or very solid financing locked in, just to ensure that you're not in a position where you need additional capital later. Another great thing about commercial real estate is that the value is based on the NOI, the net operating income. So if there's $100 of profit, it might be worth $1,000. If you can double the profit to $200 for that same property, you can basically pump the value up to double almost. It depends, of course, on the property, the condition of the property, many different factors. But the reality is almost nowhere else lets you increase the income and increase the value proportionally so quickly as commercial real estate. Scale. Now this is super important. Just on commercial real estate, you're talking tens of trillions of dollars of commercial real estate. No single person, no single company can own it all. There's so much room to grow. So as you get better, as your game gets better, you could add zeros to the back of the deals that you're doing. You might start out at, a 200, 300, 500,000 investment. Then you can do a 5 million, 50 million, 500 million. 5 billion. There's no limits to how much you can grow. The better you get, the better your skills, the better your network, the better you are at putting deals together, the larger you can grow your business. So there's almost unlimited scale. Real estate versus other asset classes. Just simply looking at the numbers, REITs, for example, REITs, which are basically real estate investment trusts, they hold grade A commercial real estate. That can be offices, that can be self-storage. There's 4 main self-storage REITs. That can be hospitals. They can hold different kinds of asset classes. But what we found over time is that real estate versus gold versus the S&P 500 versus just buying a low-cost index fund has outperformed. Why? Because it has all of these factors working for it. It has the debt, capital growth, it has the cash flow, you have the debt pay down, and inflation also works for real estate too. So over the last 20 years, by far, commercial real estate has outperformed every other asset class. And within that, self-storage has been the best performing asset class. And we'll see later in this course why, but the economics of self-storage are fantastic. If you're in an apartment building, you've got people in the units, you've got very high expenses, the margins are slim, there's a lot of competition, there's a lot of big companies putting capital in, driving down the profits because it drives up the prices. With self-storage, you're typically looking at 25 to 30% of your revenue is your expenses. The rest is margin. So it's a very high margin business, and done right, if you choose the right markets, can produce fantastic returns. And the maths again shows that over time, over the last 20 years, self-storage has outperformed offices, multifamily, and retail. So for us, based on this evidence and our own operating experience, so from looking at mobile home parks, looking at industrial, looking at other asset classes as well, self-storage has by far been the best return on investment for us, and it's why we doubled down, jumped in deep, and are continuing to purchase and grow our portfolio of self-storage facilities. So, cash flow. Self-storage produces fantastic cash flow. I mentioned just now, it has low expenses, and then also you can grow the NOI. And what we find often is because a vast majority of self-storage facilities are owned by mom and pops, they might be reporting, say, $300,000 income a year, but they haven't raised rents in 3 years. They haven't cut any costs. They haven't looked at ways to market the property better. There's always ways to improve operations. And by improving operations, you improve the cash flow, you improve the NOI, the profits, and therefore you improve the value and your return on investment too. What's great about this business is it's a very stable and predictable cash flow. It's not sexy, it's not crypto, it doesn't do all kinds of wonderful things. People rent the units, they pay every month on auto pay, the vast majority of customers. You increase prices with the market or past the market, you can expand your facility. There's a few things you can do to help increase returns. It's not sexy, but it is stable, and it is a business that is very predictable if you manage it correctly. The other great benefit of commercial real estate is, we mentioned briefly, is the tax savings. Of course, before you do anything related to tax, please speak to your CPA about your specific situation. But generally speaking, if you are a real estate professional, there's a lot of different ways you can use the asset purchase that you made to offset short-term capital gains, long-term capital gains, income taxes, and even incomes earned from your investments in properties as well. Capital gains. Okay. So the value of commercial real estate is based on the net operating income. So the better operator you are, the more returns you can get. It's not limited in the sense that, if I buy a facility and Bob buys a facility, I do a fantastic job running it, Bob does a terrible job running it, the value is the same at the end. It's different. It's not like a residential house where you're looking at comps usually. Income has a huge factor in it. Of course, comps also come into play, but if you can increase the income, if you can operate better, you can create substantial value and wealth there. There's high leverage, and you can force the appreciation. For example, let's say I have a facility and the rents haven't been increased in 3 years. I increase the rents. I add in a security gate. I add in lighting. It's more appealing to my customers. I now have a backlist of customers that want to move in. I increase my rents again. I reinvest that money into an expansion. All of this is creating forced appreciation. I haven't had to put much additional capital in, but I'm getting a substantial return on my value on my investment. Why invest in self-storage? So starting out, you can buy in at very high cap rates and cash on cash returns versus other real estate. If you're going into a large scale multifamily, you're talking about very, very low returns on investment out the door. And there's not much you can do to increase those. It's very, very difficult. With storage, you're generally buying at a very good return on investment from day one with a lot of upside if you've chosen the right facility to buy. It has a much lower expense ratio than other forms of commercial real estate. So again, we said multifamily, even mobile home parks or offices, these have large costs. And for example, let's say you buy a relatively modern self-storage unit, built in the last 20 years, your repairs and maintenance are almost nothing, really minimal, absolutely minimal, because they don't deteriorate. There's not someone there every single day using it like an apartment. There's not a big refurb cost if a retailer moves out and a new retailer moves in. They're very consistent. So the repairs and maintenance, which can suck up a lot of capital in real estate, you can make lots of profit every year and then suddenly have a big repair and maintenance expense and all of that goes back in. With storage, it tends to be a very small percentage and there isn't much capital reinvestment, meaning that becomes profit in your pocket, that becomes money you can keep. Of course, if you buy a very old facility, you're going to have higher repairs and maintenance, and we'll cover that a little later, but you're really looking at something in the last 30, 35 years will keep you from having a lot of repairs and maintenance costs. You're getting cash flow from 50 to 500 or more tenants. You're not solely reliant on one big industrial customer, which if they go bankrupt or move out, can take you a year before you have cash flow again while you still have to pay the mortgage. You may have, say, 500 units let out. If one customer leaves, how much does that affect your cash flow? Not even a percentage, 0.2%. It's very little impact of customers moving in and out. Your cash flow is relatively stable. And if you're consistently marketing, you can keep increasing those rents and increasing those cash flows over time. The delinquency process. So if you have an apartment, someone doesn't pay, the laws are very, 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 very tricky there. But with self-storage, usually the laws favor the self-storage owner. So as the owner, you can quickly get someone out, get that unit released, and there isn't a big cost to prepare the unit again, as you would, repainting an apartment, redecorating an apartment, tidying up the apartment, cleaning the apartment. With self-storage, it's a very quick turnaround, very easy to get someone out that isn't paying. The laws favor the owner in the majority of states. Month-to-month tenancy. Why is this good? Because, for example, in this inflationary environment, you can increase the prices as you go along. You're not locked into a contract that you signed 5 years ago for a long-term tenant. As inflation's kicked in, as the market rents have gone up, you can't do anything. With self-storage, you can drive market rents. If you make improvements, you can put your price higher than the competition. If you're doing new expansion, you've got brand new products, you can drive it higher. The month-to-month tenancy works for you, and the vast majority of our customers in self-storage are on auto pay. So 70% of them are paying automatically every month. We don't have to do anything to get that specific customer. No rent regulation. So as we talked about, the laws favor the owner. And so what you do on rents, what you do on market increases, cost increases, you're not restricted in the vast majority of markets with self-storage. You have a lot of freedom to improve the facility, expand the facility, and then increase rents to match the improvements that you've done. Self-storage is relatively easy management. Someone comes in, they lease a unit, they put their stuff there, they come in and out remotely. You're interacting very little with that customer after the initial lease is signed. They can service themselves in terms of going in and out. They're not even at the property very often. So the tricky parts really of the management is making sure you win those customers, the marketing, the customer service up front, and then quick turnaround of units and getting those out. But other than that, there's not much interaction. There's not much daily management that you have to do in self-storage. The other great thing about storage is not only has it had a great track record, the future is looking fantastic for self-storage. The availability of debt. Okay, so in recent years, self-storage has come more and more into the limelight because larger banks are seeing self-storage as a very stable, growing industry. They're much more likely to lend. So compared to 20, 30 years ago, the financing available, the loan terms have improved and improved and improved. So the ability to finance properties is there. And finally, no on-site tenant equals low liability. If someone's living in your apartment, there's a fire, there's an accident, they trip, they slip, you know, there's all of these potential liabilities that can impact you as an owner. Whereas with self-storage, that person's not living in a unit. They'll be there for 30 minutes, in and out, maybe once or twice a month, once or twice a week. Your liability, your risk of anything happening goes well down. And of course, there's insurance in place for self-storage. Tenants can buy protection for their property as well. The liability is not on you as an owner for the belongings inside the self-storage unit. So just to summarize some of the key things as well, we talked about self-storage being a very high margin business with low overheads and low capital expenditures, and you get very high returns on the capital that you do spend. If you install, you know, security gate lighting, you can drive up the rents that you get. If you do an expansion, you might build at $70 per square foot for an additional unit and be able to lease it out at, you know, anywhere between $10 and $15 per year and give it a value of anywhere between $150, $200 per square foot. So building has a very high ROI and then produces great cash flow as well. So low capital expenditures. Many real estate types, you're earning income, but then every time a customer moves in and out, you're spending a lot of income. Storage, very low capital expenditures. You know, once the buildings are there, the roof's there, the paving's there, you know, there's not much that can break, there's not that much can damage, no one's using it every single day. Flexible pricing. So, especially in this kind of inflationary environment where we're not sure, you know, what's going to be happening with the economy, we're able to make improvements and keep driving prices up because we have everyone on auto pay. We can make improvements to the property and we can control it. If we find costs are increasing, we can increase prices too. As I said momentarily ago, excuse my terrible English, there's a low cost to expand or build. Basically, you know, for $70 a square foot, you can create $200 a square foot in value, plus get paid in cash flow. And if you're expanding an existing facility, you can use the cash flow from your existing facility to expand your building. So you're not having to put huge amounts of additional capital in to maybe even double the size of your asset. It's amazing. So you buy a property for $3 million, you do a $1.5 million expansion using the cash flow of your existing $3 million property to cover it, and now you've got a $6 or $9 million asset from your original $3 million without much capital, additional capital being put in. There's not many businesses and there's not much real estate where you can do that. If you're building in apartments, the margins are much lower and the costs much higher up front. And finally, the stable cash flows. So with real estate, what you want to build over time is a cash flow machine, a capital growth machine, and self-storage allows you to do that. Every facility you add, as you add more units, they're generating additional cash flow, positive cash flow that can then be reinvested to grow your business over time. Some businesses, no matter what you do, that cash just gets sucked back in. For example, automakers, they design a new car model, they make billions of dollars, then they have to redesign a new car model and they spend billions of dollars to do that and repeat all over again. They make net zero money overall as a result. They go up, they go down. Whereas with storage, the cash flow compounds. So that money allows you to grow. And the evidence of that is Patriot Holdings itself. Over time, we've been able to add more and more properties and we're expanding faster and faster. Why? Because the cash flow from our original investments is supporting more growth and more growth and more growth, because overall it spits off cash and it spits off returns. The other great thing about self-storage is its recession resistance. The first initial impression a lot of people I speak to have is that, you know, the first thing I'm going to cancel is my storage if, you know, I lose my job. It's the opposite. We find that what happens is if someone needs to downsize, you know, if there's a death, if there's a divorce, if they're dislocated, they need to move somewhere else, the first thing they're spending on, or the main thing that they keep, is storage. So they may need to move everything from their apartment, put it in storage, and then move to a cheaper apartment if they've lost their job or their house, for example. If they're moving across the country, which we found with COVID, a lot of people moving to the suburbs, where a lot of our storage are, we saw kind of the wave coming. Then what happens is people are, again, renting storage, putting things in storage, and then moving and then keeping that storage there. Everyone thinks that I'm going to only use it for 1 or 2 months, and then we find that the average tenant is 1, 2, 3 years or more. So it's quite the opposite of what we expect. In storage, in the last recession, 2007, 2008, 2009, performed extremely well. Yes, it dipped in places a bit. In some markets, it increased a lot too. So it really is, storage is a very local business. But overall, storage performed the best out of all the different commercial real estate asset classes that there are. It was extremely stable. Why is this important? Because markets don't always go up. You want to protect your capital when they go up or down. And so if you're buying into an asset at a good price, which has downside protection, then basically if it does go down, your capital is protected. But if it goes up, you can make great returns. That is a great investment. It's almost like insurance in case something goes wrong. And storage overall, there's no guarantee that, you know, a recession doesn't reduce how much income you get while you own a unit. But overall, we have found that storage performs extremely well even in recessions. For example, the COVID pandemic. Storage rents, you know, increased 20, 30, 40% year on year in some markets. There was a drive for people working from home. There was a drive for people with, you know, home gyms. They were clearing out their house. They're at home all the time. They've got nothing to do. You know, they can't travel. They couldn't go anywhere. So they're remodeling their home, and, you know, they don't want to throw away that precious old sofa or their family memories. So they're putting it in storage and then remodeling their home. Or we found with COVID as well, a lot of people were moving out from the major cities out to the suburbs. And that trend isn't going away just because COVID is dying down. It's actually a sustained trend of people wanting more space, better value for money, and a better quality of life. So by being in these secondary and tertiary markets, if you carefully select them, you're benefiting from this wave of people moving in, storing, moving, downsizing, and needing home office space or home gym, and then putting belongings into storage as well.
For more information on commercial real estate investing, go to patriotholdings.com. Thanks for listening.